and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a journey towards financial freedom. It's not to boast or brag, it's to say, look, if I can build a portfolio, so can you. If you take some steps, create them in a tax-free wrapper and create an action plan. So let's dive into the latest video. Now this video is about my stock and shares I set for the month review December 2024. So what are the aims of the portfolio? Well, we were looking for yearly dividends of £3,600, 10% growth, and a year-end valuation of £113,000. So how have we done then? Well, we started a month at 121,330. We finished the month at 122,998. So year to date, increase of 22.38%, which very happy with when we compare. The FTSE has done about 5.8%, we're mostly invested, and the S&P has done 25%. So we've had a very good year, shall we say. Not always the case. Into the mechanics, shall we say, behind the funds or the portfolio. We normally put in monthly contributions, so following graphic, we put £851 in December, so tax year to date, £3,651, predominantly based in UK and financial services, which we know about. Our platform provider charges monthly fees, about £16.51, based on a percentage of our portfolio. And if we look at the following graphic, as we said, predominantly UK based. So 50% in UK and Europe, 31% in USA and Americas, and nearly 12% in Asia and emerging markets. Now we are, shall we say, putting new funds into Americas to try and, shall we say, reduce our exposure to UK because of the track record. In the month we had some good dividends. We received £124.40 in the month. So year to date, £4,048.91. So nearly £450 above our expectations, and across our shares, we've got an average yield of 5.98%. So what dividends did we receive in the month? Well, Card Factory gave us £47. We reinvested 43 new shares. HSBC, the bank, gave us a quarterly dividend of £41.88, and Sainsbury's, the retailer, gave us a half-year dividend of £35.52, reinvested in 12 new shares. So, well above our expectations for the year to date. Remember, they're my own personal opinions. If you like the videos, smash the like button, subscribe to the channel. Now let's look into the shares and the funds held in portfolio. The portfolio, we mainly pick an individual shares, what we're happy with on our own selection, shall we say, or what we call long-term buys. We've got no reason to sell the shares unless something dramatic helps them or a change in management. So our shares are worth collectively £55,622, of which 45% is in shares, 39% is in the FTSE 100, and 6% is in the FTSE 250. We've got 10 shares, 7 in profit, 3 in loss. So let's look at the holdings in great detail. Now our largest holding is Lloyds the Banking Group, nearly 9%, £11,000, just over 20,000 shares. They've had a very good run, shall we say, in 2024. Not always the case, they've struggled, but a good, shall we say, play in the UK. Very nice yield, recovery. Being affected, shall we say, interest rates got up, margins increased for a long-term hold. We own LNG, nearly £11,000, again, nearly 9% of our portfolio. 4,749 shares, but we bought it for a reason. It's got a yield around about 9%. Our next holding, shall we say, is also in the insurance market. It's Aviva. Nearly 2,000 shares, £9,000, 7%, and again, a very good yield. It's very cash rich, and it's just made an offer, shall we say, for direct line of nearly £4 billion. So that was approved, or made an offer just before Christmas. Let's see the time frame moving forwards, but it's making acquisitions. It wants to grow again. We also own Barclays, 1,651 shares, £4,500, 3.5% of our portfolio. Again, just like Lloyds, yield around about 5%, but very cash rich, has recovered, shall we say, and a very good performer during 2024. Away from the UK banks, we own HSBC, 535 shares, £4,200, 2.5% of our portfolio, but again, very cash rich, does pay a quarterly dividend. We own NatWest, 1,008 shares, £4,000, 2.3%. One thing to note with NatWest is the government has reduced its control, now down to 10%, and it will, shall we say, be full ownership within the coming months, the early part of 2025. One thing with NatWest though, it was in the top performing shares of 2024. It was up nearly 90% year to date, so an excellent run after, shall we say, years of struggling, but a long-term hold. And let's just say, hopefully the shackles are off when the government reduces or completes its full state closure. Away from the banks, we own Card Factory, nearly 2,000 shares, £4,000, very cash rich, did struggle during COVID, but dividends being recommenced, is on an acquisition phase in America, shall we say, and it is opening new stores. We own AJ Bell, the platform provider we use, 731 shares, £3,500, 2.7%, but what we consider a growth company. Assets under management increasing, customers increasing, and it's gone, shall we say, mainly through platforms, but mainly through financial advisors. So it's a growth company. Does pay a small dividend, but it's a very attractive company. We own Sainsbury's, the retailer, 923 shares, £2,500, 2% of our portfolio, and as we found out in the month, it does pay the yield around about 4 to 5%, but everyone needs food, everyone needs to eat. Let's hope they're going to have a good time to Christmas trading when statements announced early in January. And then finally, we own the Phoenix Group, the pension provider, 466 shares, £2,400, nearly 2% of our portfolio. We put 2,000 in. It's up 20% year to date, but it was done because it's got a good yield and it's something we know about. It's what we speak to our clients with because they've been acquisition stage within the pension sector. So a collection of quality UK shares, all being around for many years, going nowhere, safe, secured, what we may call boring, but it does what it says on the tin. Some very good results or figures within 2024, especially because the banking stocks. Okay, but remember, they're my own opinions. Now let's look at the funds held within the portfolio. We own 9 funds, 5 in profit, 4 in loss, fund value £67,500. We're moving towards, shall we say, more passive funds. We just switch off, very low fees, giving us good returns, shall we say, as the market does. Our largest holding is a passive ventures fund, nearly £24,000, 20% of our portfolio, covers, shall we say, numerous countries. We own an LNG technology fund, £15,500, 12%, for a very good track record recently because of the Magnificent Sevens. Who knows what will happen with Donald Trump moving forwards? But it was done, shall we say, to give us great exposure to America and the latest Fed section. We own a Fidelity World Index fund, £14,000, 11% of our portfolio. It owns around about 1,500 shares, but a very low fee of 0.12%, and we did top in the month with £900 contributions. We just switch off, does what it said in the tin, but an excellent track record, around about 10% year to date, but last year it was up 20%. Some funds that have struggled though is a China fund, £2,500, 2% of our portfolio. They keep saying China's going to recover, but never seem to materialise. We own 2 emerging market funds, £1,200, 1% of our portfolio, and a second one, £1,200, 1% of our portfolio. When they're going to be cash rich, shall we say, or back in positive territory, we're going to reduce them and put them into our existing funds just to save fees, costs. So hopefully that'll happen soon. One fund that has struggled though is a Russia fund. We put £500 in several years ago, went up to £600 plus. Russia-Ukraine conflict came, it's struggled ever since. But thankfully it makes up 0.17% of our portfolio and it's now back above £200. We still need to sell at loss, but who knows what will happen with Russia moving forwards. But thankfully it's a very small percentage of our portfolio. Now, 2 funds were bought for a particular reason. We ring-fence some money for a particular objective in future. We put £3,000 in an S&P 500 fund. It's now worth 3.5, so a nice profit last 12 months. Makes up nearly 3% of our portfolio. And an FT All Share Index fund, we put 5,000 in. It's now worth 5.9, but makes up nearly 5% of our portfolio. We've done it for a reason. We didn't want to add it to our existing holdings because we're going to get that out at a later date as a short-term issue. But we didn't want to keep it in cash. So, as we said, a collection of shares. Predominantly going to go more towards a passive, but we bought the funds because we were, so we say, solely UK based. Our aim moving forwards is to reduce our exposure to the UK, so any new funds we'll get will put into our passive funds. Remember, it's not a get-rich-quick scheme, but it just goes to show, if I can build a portfolio over 6 figures, you can too, if you create a plan. Invest in a tax-free investment wrapper and invest on a regular basis. Remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you again soon.